Wham! There at 105.7 Light FM. Good morning, all. My name is Morning Dave. We're at 8:42 now. Advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation. And that means it's time to check in and see what you ought to be asking your tax and legal advisor and check in on your money on Wall Street this morning. On the phone with me, Phillip Statler from Statler Financial Services in downtown Sebring. Phillip, good morning. How are you?
Hey, good morning, Dave. Doing well today and getting ready for a little long weekend and excited about going to see some grandbabies today.
I was going to ask if you were going up to the Knowles game tomorrow.
Nope. I'll be finding someplace to watch it, though.
Okay, I was going to say Alabama. That's not going to be a task here. I'm afraid I'm going to be giving you sympathies on Tuesday. I could, Gators get an easy opponent. The odds makers don't even have numbers on that one. And then the Knowles end up playing Alabama, and Miami ends up looking at Notre Dame, and I'm saying, boy, this is going to be a weekend where 2 out of 3 of my favorites are going to be unhappy by the end of the weekend, and I'm afraid to say that's probable, wouldn't you?
Who knows? I'm hoping not. I hope you're wrong. I
know. I'm kind of forcing a booster to sound like stinking thinking, and I'm not going to do that to you. Back up to yesterday, we had an interesting day. Everything ended up in the green, but it took until midday before everybody said, oh, everything's all right, and traded us up. It is worth noting, after the Dow was up 72 points, that's fine, S&P 500 crossed over 6,500 for the first time. It was up 20.5. NASDAQ was up 115 as well, but 6,500, when you start crossing even hundreds on the S&P, that's a pretty doggone big psychological barrier to cross, wouldn't you agree?
It is, Dave, and it looks like, right now, from what we can see, it looks like, depending upon what happens today, obviously, but at this point, it's looking like that the S&P, or most, I think all the indexes actually, are going to end up positive for the month of August. Now, that's not really necessarily normal. Statistically, more often than not, August ends up in the red, as well as September. I've been reading a couple of articles about, well, just because August is going to end up probably in the green doesn't mean September will end up in the green. Statistically,
all those aphorisms from Wall Street, they are based on statistics, that old sell in May and go away wisdom that everybody's pretty well chucked. And I know that August and September are normally about the poopiest months on Wall Street, aren't they?
Yeah, September actually, I think they say, August through October is, because let's remember, Big Black Friday happened in October. Yeah. We've had a lot of Black Swan events that have happened in October. And so, these next couple months lend themselves to a lot of volatility.
We could be touchy, in other words, right?
That's right. Could be. Like I said, we haven't actually gotten through August yet until the close today. So we don't know that it's going to close up, but it's on that trend.
Yeah, so far it looks good. I was kind of surprised by the curve up, because we started out the morning with good gross domestic product. You say that with not enough coffee in you. Good GDP numbers. NVIDIA, kind of disappointing investors, which I'm still banging my head against the wall. You show a 56% increase year over year on profits, and they sell you down. That's still hard, but still, it was a negative yesterday. And then we get pending home sales midway through the morning, and they were a little disappointing. And then all of a sudden the market says, oh, hey, let's go back up again. I kind of wonder whether or not we kind of changed our mind about interest rates and got more optimistic. What do you think?
Yeah, I just don't know what's driving, the market as a whole, because, tech obviously has been driving. I was reading an article about tech. How it is in the month of August, it actually has started to give up a little bit, the tech index. So it's going to be interesting to see if you're a technical person, they start to say that the technical is starting to hit a head and shoulders. It's starting to hint of a head and shoulders pattern, which if you're a chart person, that's an indication of prices starting to fall off when it comes to the tech sector.
And that's one of the things that I was reading about NVIDIA down the line. Yeah, they're growing like a flippin' weed, but at the same time, at some point in time, the mega buyers of their fancy pants chips are going to have all the chips they need, and then where does it level off? And NVIDIA has to start actually performing in line with what it's really selling instead of upon hopes and plans and beliefs in a golden future. I mean, somewhere down the line, you can buy as much as you need of virtually anything out there. And the question is, when is that point going to be for NVIDIA? Obviously, investors aren't thinking they're quite there yet, but it sounds like some of them are starting to wonder.
That's right. I mean, we are getting to those, all-time highs, and at what point do we see a correction, of 10 to 15%, or even or what point what causes us to go into a bear market? Now, we don't know those things, right? Interest rate, tariffs haven't taken full impact. And so, but before we went on the air, I don't track some of that stuff as best as you do, but talking about some of the tariffs being put on today will affect some of the smaller companies out there.
Absolutely. It needs to be mentioned that this is the day that what's called the de minimis exemption to import tariffs takes effect. That means the little stuff you buy from Temu and eBay that happens to come from across the pond or anything, all of a sudden the little stuff now is getting tariffed as well. And from what I'm reading, businesses like Etsy and eBay are kind of, well, I won't say tanking, but at the very least they're trading way down based upon the fact that, oops, all of a sudden now they're getting tariffed, and they've been kind of under the radar all this time on the tariff laws. So, we're still in that volatile time where we don't know what's going to happen the day after tomorrow, let alone what's going to happen today. And that's one of the things taking place today. So consequently, your prices are going up on that cheap Temu shirt that you bought. Oh, other tidbit, by the way, we'd mentioned the other day that Walgreens had fallen out of the Standard & Poor's 500, and I poked a little fun how the mighty had fallen from the Dow. They got dropped off of that, then they dropped off of the S&P. As of this morning, Walgreens has gone private. Sycamore Capital has now bought out Walgreens, so it's now a private company, and it's not publicly traded at all anymore. Just to let people know your local Walgreens isn't in trouble. It just got sold.
Germany, their inflation hotter than expected, came in at 2.1. They're expecting 2, and not helping the Germans any.
Poop, and that kind of dovetails into our lead story as far as market moving for today, and that's the PCE, Personal Consumption Expenditures inflation rate. And I'm not sure whether this is going to be good news or bad news for folks looking for lower interest rates, because basically we came on right about what we expected down the line. The big core number that Jay Paulson follows so carefully, they expected 2.9%. We got 2.9% on an annualized basis. We expected a 0.3% increase on the core, got 0.3 increase on the core. Do what you say you're going to do is always good on Wall Street, but I'm not sure what that means it's going to end up giving us as far as a market reaction as far as interest rate expectations go.
Well, I'm not either. And to point out one thing too, Dave, is that everything basically stayed the same as last month's reading, except for that core PCE year over year. The last reading was 2.8, and now it's up to 2.9. Now, that was what was expected, but it still is a slight increase in that inflation number.
And you can take that either way, I guess. Okay, fine. It's we haven't whipped inflation yet, is the phrase that I've heard used a million times. But at the same time, it's one more month without a big impact of the tariffs that we've had. And got to keep in mind, a lot of the tariffs we've had since the first part of April. So at some point in time, the naysayers are going to have to stop saying, well, the tariff inflation coming, it's coming, it's coming. Well, the answer is when, right?
Yeah. And the other thing we have was personal income and personal spending. I saw the personal income number. I didn't see the spending number. Personal income came in basically as expected, up 4 tenths, and that was better than last month.
That's good to hear. That and something that's good news. We are looking at reports as well. Not a lot of them left. We spent some time talking about NVIDIA because they're so doggone big. There are some other big companies, and one of them is a big bellwether on construction. Caterpillar, I understand, reported their quarter, huh?
Yeah, Caterpillar, I don't have the numbers. I do have what they did talk about, though, in terms of a warning they came out with. They warned that tariffs could eat into about 1.5 to $1.8 billion hit to their bottom line. Um, and that's a pretty big number for them. It's got them trading down a little bit, about 2.4% this morning.
All right. Any other reports we hear about?
We got a few. We got Dell reported. They came in a little bit better than expected at $2.32 a share, 2 cents better than expected, revenue better than expected. However, some of their outlooks weren't up to what everybody had expected. It's got Dell trading down almost 6.5% this morning.
Ooh, that was something I hadn't heard. I did hear the tidbit they lifted their forecast on artificial intelligence servers, evidently by the fact that they did okay and still are selling servers like they're going out of style. Must be the cheap laptops they're falling flat on, huh?
Yeah, it's something in there. Because it looked to me like all the numbers looked good, but somewhere in
Yeah.
there they missed. Another one, Ulta. Maybe they can help you out, Dave. Ulta Beauty. They came in. They had a good quarter. They beat on earnings and revenue, and they raised their full year earnings number up substantially, from $23.85 to $24.30, somewhere in between there. The expectation was below what their low value is now. The expectation was $23.65. So some good news from Ulta, and they're trading up about 3.5% before the market gets started. And the last one I have for you is Affirm. Remember, Affirm is the buy now, pay later company.
Yep.
Amazon uses them. There's a couple other companies that use them now. They had a good quarter. They beat by 9 cents a share, came in at 20 cents a share, revenue better than expected by about $50 million, it looks like. But they had a really good quarter. They're trading up almost 17% this morning, Dave.
Cool. Resetting the table for the morning. Green day yesterday on the major indexes. 45 minutes before we open the last trading day of the month. How we doing this morning?
Yeah, we're going to give a lot of red ink this morning, Dave. We got the Dow trading down almost 1/4%. The S&P 500 is trading down about 0.2, and the NASDAQ 100 is trading down by about 0.4%. So solid red in the futures category there. On the other side of the coin, silver is dropping again about 1/3%. Gold's flat. Crude oil is down 0.1%, but I think it's still a couple of cents above where it was yesterday. $64.54 a barrel right now.
That's 3 days in a row. I don't like that trend. Looking overseas, I got a weird picture on the Asian rim. Our de minimis exemption on tariffs is not helping overseas markets one tiny little bit much. But for some reason on the Asian rim market, the mainland Chinese markets were up. Basically, everybody else was down. We're not talking major sell-offs here, but everybody else is down by about 1/3%. The mainland Chinese markets were up by about 1/3%, and I can't explain that. Europe, looking at our tariff policy and our numbers coming out, generally everything's in red ink this morning. Again, not by a monster amount, but the average European index down by about 1/4% halfway through their trading day. Getting my retirement together so I can actually count on being able to retire someday takes a pair of eyes to get the risk and the expenses out of my retirement plans. How do I find you to do that, Phillip?
Dave, that's why I offer folks 30 minutes of our time on the phone to talk about where they are, where they need to get to have that retirement they always dreamed of. They can give us a call at 863-382-0037 to schedule their core retirement analysis. That's 30 minutes, you and I on the phone. And then join us this weekend, even though it's Labor Day weekend. We'll be right there Saturday morning, 6 a.m. and noon. Sunday morning, 10 a.m. on Highlands News Talk, 7:30 a.m. and 95.3 FM.
And back again tomorrow or next week, starting on Tuesday. I'll be here Monday to tell you what the overseas markets are doing on light. Have a great weekend and a happy Labor Day to you, sir. We'll see you next week.
All right, buddy. You too. Take care.
Be well, my friend. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, again, I want to thank you for joining us today. Hope you guys have a great, fantastic Labor Day weekend. I'll see you next week. Bye now.